Everyone tells you your credit score is important, but what if I told you that number could be secretly driving your financial future a lot more than you realize? From the house you live in, to the car you drive, to even landing that dream job you've always wanted, the credit score can open or close doors in your favor. And in today's video, we're going to be breaking down the shocking truth about credit scores and how it does affect your future. So stick around, because the last part will reveal the one mistake that could actually tank your score for many years to come. So exactly why does this matter, and why does your credit score matter? Here's the truth. Your credit score is not just a number. It is your financial reputation. And I know Dave Ramsey says nobody needs a credit score. You don't need it because only if you want to borrow money, but you have to think of it as an adult report card. Unlike school, we are looking at landlords, you're looking at insurance companies, you're even looking at companies that could possibly be looking to hire you that utilize a credit report. So a bad score could cost you hundreds of thousands of dollars through your entire life, paying more interest if you are borrowing money. And of course, imagine buying the exact same house as your neighbor, exact same price tag. You get 2% more, boom. You're paying a lot more interest for the exact same product or service, just for the simple fact that your score was lower. It's kind of a financial trap that a lot of people don't take into account, definitely making it a reason on why that score does matter. So what is your credit score really? When we look at a credit score, it's really usually based on two things. One is a FICO score, which a majority of you have probably heard of, and another one is a Vantage score. Now, FICO scores historically are a lot more expensive for financial institutions where I work in. In addition to that, they are a lot less forgiving when it comes to making an error on your report. The Vantage score on the other side is a lot more lenient when it comes to actually proving the individual's ability to pay. Now, these range from the 300 to the 850, but here's the catch. This system was never designed for you and I. It wasn't designed to help you. It was designed to assess your liability and your risk to repay, which of course, if you're doing well, it is designed really for lenders to decide how profitability and how risky you are to actually pay. The higher the score, the safer you look at payment, the cheaper it's going to be for banks to lend you money. The lower score, guess what? Unfortunately, you're going to have to pay a lot more if you're looking to borrow, or you could be just denied for that loan that you need altogether. And yes, even though it affects things, renting an apartment, signing up for utilities, getting insurance, even job applications, that is the reason why credit scores are so important. And having a good one is really vital to your financial well-being. So we're going to run through some of the shocking truths that we see. Your score is not all about wealth. Now, I have been in the financial institutions for roughly 20 years. And honestly, I have seen people that are really in the $200,000, $300,000, $400,000 a year. One, living paycheck to paycheck. Two, have absolutely horrible DE credit, falling in the place where they never catch up on their bills. They're not paying anything. It has entirely nothing to do with exactly how much money you earn, because on the flip side of that, I've seen people that are making $30,000, $40,000 a year that have a 750 plus credit score doing incredibly well. It's not about how much you make, and the score is not about wealth. It is about how you manage credit. We're talking about on-time payments, debt to limit ratios, and the length of your credit history. This means that even people can be financially successful and can even get rejected from loans if their score is completely ignored. Now, the second shocking truth in here, small mistakes make big damages. We talked about this a little bit earlier. Did you know that one late payment can drop your score 50 to 100 points from one single late payment? That's the difference between getting approved for a great interest rate or the lowest interest rate possible, and possibly getting a much lower interest rate, or even being denied for the loan in general. Even worse, late payments can haunt your credit score for up to 7 years. Absolutely another trap that we see, closing out your older credit cards. It feels responsible, might put you in a better situation for the short term, but in reality, you're cutting your credit history off. And that's the reason why most people say, if I close a credit card, is it going to affect my score? Absolutely, it definitely can, if it's really doing two things. Number one, you're lowering the amount of available credit you have. Number two, you could be wiping out years or even decades of credit history that you had with that card. Your score could take a major hit within there, and really small mistakes can really make a big difference. Now, when we start looking at the next one, which is credit just isn't about borrowing. This is again where I feel like Dave Ramsey kind of has it wrong. A little bit of an information. It might actually completely blow your mind. Credit scores are not all about borrowing. When we talk about this and thinking where I live in Michigan, insurance companies use it directly, your credit score, to calculate the insurance premiums. I've talked to a lot of insurance companies. I even deal directly with some, and they will give you a higher rate or they will charge you more for insurance if you have poor credit or you have no credit. So you are going to get an insurance premium. You're going to have to pay more money for insurance just for the fact that you have bad credit or you do not have any credit at all. Same with landlords. When you look to get an apartment, landlords, if you're looking to rent, they will pull your credit. They will see what your credit history looks at. If you have poor credit, if you have no credit, chances are you could be passed up and really maybe charged a higher rent, maybe passed up for an apartment in its entirety because you do not have any credit. And even thinking again, when I work in a financial institution, employers check it as part of the hiring process. You have to consent to a credit report. Bad credit could block you and literally block you from housing, transportation, and even a career, which is not just inconvenient, as some people might see it. It can be absolutely life-changing when you think about this bigger picture. So how do you protect your future? What exactly does this look like? Good news, you are in charge of your credit report in the entirety. I deal with people that are 18, just starting to build credit, 40s that are rebuilding credit, or even 70s that are no longer going to be using credit. There are 5 big factors that make up the credit report. The first one, payment history. Always have to pay on time. It is 35% of your credit report in its entirety. If you make a late payment, like we said, 50 to 100 points could come off your credit score, which can be absolutely detrimental. Payment and paying on time, even if it's the minimum payment, guys, if you have a credit card that's $25, $35 for the minimum payment, making that minimum payment will keep that payment history absolutely perfect. Second one of this, credit utilization. When you have balances on credit cards, you want to keep them under 30% of your limit, meaning if you have a $10,000 card, you do not want the balance more than $3,000. And honestly, credit card utilization in America today is completely out of control. You need to get those balances to zero. That way you're not paying interest on those cards, but that's another thing for another video. Third one in here, length of credit. Don't close out those old accounts. We talk about this a lot. Can it be absolutely detrimental to your credit score? Absolutely. If I have a credit card that I've had open the same credit card for 20 years and I go ahead and I close out that card, I just systematically wiped out 20 years of payment history on that card itself. Now, of course, through time, you can systematically eliminate some of these, making sure that you're replacing all of that length of credit or that older credit with more recent credit, active credit, making sure, again, that you're building it. And it won't have quite an impact as people think. If you have multiple trade lines, we're talking maybe a mortgage, maybe an auto loan, some other credit cards to replace that length of credit, and making sure, again, that when you look at your length of credit, it's spanning at least 10 plus years before you close out some of those older cards. And then, of course, looking at a mix of credit. If I just have one single thing and one single thing only, that is credit cards, that means they are not going to know, how do I pay on my mortgage? How do I pay on my auto loans? What is my payment history for other things outside of the credit report? This could really make a big difference. Now, some institutions will lend on just the score itself, meaning whatever the rate is. Some institutions will look at the mix of credit. And if you don't have anything like variable lines, or if you don't have any of those, let's say larger car loans, chances are you could get countered for a co-borrower, or you might be denied in the entirety. And the final one, new inquiries. This is where I see a lot of people get absolutely burned, applying for too many cards, too many lines of credit on too many places all at once. Once, twice, maybe a year, regular utilization, maybe credit inquiries. For majority of people, it's going to be maybe once or twice every 2 or 3 years. If you're looking to get a new car, maybe pick up another card. Absolutely, guys. But the utilization, I have seen people with 20, 30, 40, 50 inquiries in the last 12 months, which is kind of crazy because they're literally applying for credit anywhere that they have possibilities at. So one powerful hack that can help this, set up automatic payments to at least pay those minimum amounts. This is where, again, that payment history is going to be made. You never want to miss a deadline. You never want to miss a payment. Another one that is a little quick hack, if you request a credit limit from your institution, but don't use it, So if I have a $10,000 card, I request a $10,000 increase. All of a sudden, they give me that $20,000 card. Guess what? Credit utilization will go down dramatically if I have that $3,000 balance on there, looking at 30% utilization at that $10,000 limit. Then when you bring it up to a $20,000 limit, still having that $3,000 in there, your utilization is going to go down. That is going to boost your credit score itself. So what exactly do we think about credit scores? So here's the shocking truth. The credit score is not just about shaping your finance and about being able to borrow. It is about the future opportunities that you can have in the future. Now, of course, if you ignore it, you're going to spend your life, in your entire life, paying more. We're talking paying more for everything that you have, including your insurance, possibly a job, your mortgage, if you need to borrow money, credit card rates, getting less out of that. And of course, missing out on some things that could be really life-changing. Take control of it. Get yourself freedom, flexibility, and your financial power. Now, if you find anything eye-opening or interesting in here, definitely hit that like button so more people can discover the truth about the credit scores in their entirety. Drop a comment down below and share your current financial goals and your credit goals. And don't forget to subscribe to the channel to learn all about money and investing tips. Every single day we're putting out videos in here because it's your financial future. It starts with the knowledge and with the action. So again, guys, let me know in the comments what you guys think, and I'll catch you in the next video.